Let's spend some time on gold here. All right, so here's a shorter term chart of gold, 4-hour chart. Bullish fork back to January and trading very firm within this, right? Each dip really has been supported along the center line. And since breaking it, the only dip you've really had has been the one from, this was yesterday, okay? We are now pressing firmly against a major level here. This is the horizontal level called 1830, which was resistance, very early in the year, and support in late January. You get through here, things get really interesting, and I want to go and look at a bigger picture chart. This was actually in last night's update. Okay, so we're going to scroll out. We're going back to the 2015 low here. Okay, this is log scale, but all we've got here is a simple channel. Okay, trend line, parallel, center line, what have you. This is textbook when it comes to median line analysis in trading. So first of all, let's just go back, right? Okay, so you had the channel, draw the channel. Big rally. Where did we stop first? We stopped here at the center line, okay? In fact, we stopped at the center line, pulled back to the midpoint, or the 25 line. And then once we broke back to, this was what we call median line acceleration, right? I mean, it's just perfect. And it's not a coincidence, by the way, that you get these textbook examples like this with gold. Gold trades technically just beautifully. And there's a reason for that. There really are no fundamentals when it comes to gold, right? Gold does not have an interest rate. It is pure supply demand. So it is pure, study of human behavior, of, which is on the chart. That's the whole point of technical analysis, right? So, okay, so we got that. Then we stopped back at the upper parallel, okay? Now, it got pretty damn sloppy over here. This is March 2020, right? After the initial deflationary markets reaction subsided, we ripped higher, and guess where we went to? I talk about this a lot in my writing and my webinars. We went to the full extension, okay, of the channel. So take this distance, extend it, and that's where we went to, like literally to the tick. And since then, we've pulled back and found support more or less on the top side of the former, upper parallel, or of the upper parallel, which is formerly resistance, now support. That is really bullish, okay? It's very, very bullish. In the context of all of that and what I just said, from that top back in August of 2020, we have developed or formed a tight coil, okay? You can call it a triangle if you wish. Point is, we've been in a contracting range since that point. And there, think of kind of physics, if you will. You've got a lot of potential energy, or spring energy in this case. And if we get through this line, it becomes kinetic energy, and we're off to the races, in my opinion. That would be the signal. So again, here's that trend line. This is back to January 2021. So year plus trend line, 13 months at this point. Very well defined, 1, 2, 3, 4 touch points. If you get through it, go with it. So yeah, gold is ready. It's primed. Does that mean it's going to happen? No, but I would certainly pay close attention to this. I would look at it every morning and or evening, and get ready for that, just mentally prepare yourself for a breakout. Okay, so that's my piece on gold. Silver, obviously lagging far behind silver. or is lagging far behind gold, I should say, which is interesting because interesting / odd. Typically, during big inflationary booms, you see things like silver outperform gold, or silver has outperformed gold during previous inflationary. But that's not to say that won't happen, but gold is knocking on the door and silver is not really doing a whole lot. So I don't know if I'm looking at this from a very short-term perspective here. I don't know, maybe this is a 5-wave move up. Maybe you pull back, find support. Frankly, I think it's a waste of time right now. I would just focus on that gold chart because that's just a powerful look, frankly. All right.